It seems everyone has an opinion on crypto, but what should you actually know before you form yours? Today we'll break down the 4 things you need to know about crypto before starting to invest. Hi, Dan here from 21 Shares. Today we're going to go through the 4 things you need to know as an introduction to crypto, including what it is, why people might invest in it, where it might fit in a portfolio, and the different ways to get exposure. And if you enjoy this video, please remember to like and subscribe to the channel. Okay, so what is crypto? Is crypto money, or is it the network that moves it? Actually, it's both. People often use crypto as a shorthand, but it actually describes both the digital asset and the blockchain technology it lives on. And before we dive deeper, we have to demystify the engine under the hood, the blockchain. Think of it as a giant digital notebook that everyone in the world has an identical copy of. Whenever a transaction happens, it's written into everyone's notebook at the exact same time. Here's how the magic actually works. Firstly, the block. Each page in this notebook is a block of data. Then there's the seal. Once a page is full, it gets a unique digital seal, which is impossible to fake. And then there's the chain. Every new page is cryptographically linked to the one before it, creating a literal chain of blocks. The reason this is such a game changer is because everyone is holding their own copy of the truth, and you can't just fudge the numbers on your version. If you try to sneakily change an old page, your notebook won't match the billions of others across the network, and the system will simply reject your version as a fraud. Even the name crypto reflects this, with the word coming from cryptography, a high-level way of saying secure coding. It's the first time in history we've had a system where you don't have to trust a person or a bank. You can just trust the maths. Now, we can't have an intro to crypto without addressing some of the jargon. You've got coins, tokens, and NFTs flying around, not to mention the fact that people use terms like digital assets and cryptocurrencies interchangeably. Full disclosure, you'll probably catch me doing that today too. But instead of trying to memorize a whole new dictionary or keeping a glossary taped to your monitor, there's a much easier way to look at this. Forget the individual names for a second. It's far easier to just understand the 3 main buckets they fall into. Once you see the 3 ways crypto is actually used, the buzzwords start to make a lot more sense. There's store of value assets. Assets like Bitcoin, which are designed to hold their value over time, serving a similar economic role to gold. Then there's smart contract assets with utility, such as Ethereum and Solana, which function as digital operating systems where developers can build decentralized applications, such as marketplaces or lending platforms, directly on their blockchain. And then there's stablecoins, assets like USDC and USDT, which are pegged to the value of a traditional currency, such as the US dollar, to maintain a steady price for daily transactions and to minimize market volatility. Okay, so why invest in crypto? Are you ready to catch the internet's next big leap? Because we're standing at a crossroads that offers investors a unique opportunity. At 21 Shares, we believe crypto will change the world, and we believe everyone should have access to it. What's behind this belief? Well, firstly, investing in crypto isn't just about the assets. It's an investment in the foundational tech of the new internet. This is a unique opportunity. By backing this space, you're participating in 3 major shifts that will change how we operate both online and in the real world. Let's run through them now. You've got automated trust, because we're moving away from a world that relies on middlemen, such as banks, brokers, and lawyers, to verify our lives. Blockchain replaces red tape with maths, making every transaction faster, cheaper, and inherently more secure. Then there's the velocity of value. If the first era of the internet was about moving information, such as emails and PDFs, this era is about moving value. We can now send money, property titles, or stock as effortlessly as a text message, instantly and globally. And then there's true digital sovereignty. For the first time, we have digital scarcity. Blockchain proves that you own the original of a digital asset, which revolutionizes how we handle everything from fine art to real estate deeds. And secondly, in less than 20 years, crypto has fundamentally reshaped the global economic landscape and our understanding of money. And as more and more people adopt crypto, it's ushering in a new era of finance. Though it's in its infancy compared to traditional currencies and financial systems, crypto has moved from a niche opportunity for a tech-savvy minority into an accelerating global force that governments and traditional financial institutions can't ignore. One reason it's sticking around is that it offers things traditional systems weren't built for, like 24/7 operation, transparent supply rules, and programmable money. Because these features are baked into the technology, they aren't easily copied by traditional finance. Another reason is that no single government or bank owns or controls crypto. Blockchain networks replace central authorities with a public record of every transaction. The result is a decentralized financial system that resists censorship and shutdowns. The evolution of Bitcoin is a good case study here. While it's still early days for the general public, the big money has already started moving in. Large companies now own over 4% of all Bitcoin, and institutional demand is currently outpacing new supply. Governments are also starting to invest in Bitcoin for their national reserves. And with the rise of ETFs, it has essentially become a standard asset that any investor can access through their regular platform. But the shift is also happening behind the scenes. You might actually be using crypto technology without realizing it. For example, since 2023, Visa has been using stablecoins like USDC to help settle payments faster. When you tap your card at a terminal, the experience is exactly the same. But the plumbing in the background is being handled by a blockchain. Ultimately, we're watching the financial system get a long overdue software upgrade. For investors, it's an opportunity to get involved while this new foundation is being laid. In addition to these disruptor traits that crypto has, it also speaks to investors looking for potential return on investment and diversification. And this is our third reason to invest in crypto. That is the role it can play in your portfolio. And we're going to dive a bit deeper into that now. So how does crypto fit into a portfolio? With crypto, even a small allocation does some of the heavy lifting. In addition to potential returns, investors also look to crypto for its diversification benefits. A key to smart portfolio building is choosing assets that don't always move in the same direction, aka diversification. Our analysis shows that crypto maintains a relatively low correlation to global stocks and has resulted in improved portfolio performance historically. Adding even a small amount to your portfolio can have an impact. This is because crypto's drivers can be different from stocks and bonds. Think of crypto as a way to avoid putting all of your financial eggs in one basket. Because it's driven by new technology rather than corporate profits, it often moves to its own beat, independent of the stock market. Your allocation will depend on your goals and your risk tolerance. And, as with any investment, sizing it so you can sleep comfortably at night is a great place to start. To read our research on this, head to 21shares.com. How can I invest in crypto? Is it better to buy crypto directly on the blockchain or buy it through your investment platform? There are essentially two main ways to own crypto, and the right choice usually depends on how much homework you're willing to do. Path 1 is direct ownership. This is the DIY approach. In the industry, we call this self-custody. This is the purest form of crypto ownership. And it works like this. You hold the private keys yourself, you have 100% control over the assets and can interact directly with the blockchain. But there's a trade-off. With total control comes total responsibility. You are the security guard, the IT department, and the manager. It's perfect if you're tech confident and want zero middlemen, but it means there's no forgot password button if things go wrong. Path 2 is exchange traded products or exchange traded funds. Depending on where you live, these are called ETFs or ETPs. They were designed to bridge the gap for investors who want the investment benefits of crypto without the technical headache. And they work like this. The actual crypto is bought for you and then stored for you with an institutional grade custodian. Your investment tracks the price of the asset, but you don't have to worry about managing a digital wallet or losing your keys. There are some other upsides to using these products, such as, because they trade on major exchanges like the Nasdaq or the London Stock Exchange, you can buy them through your existing brokerage account. Plus, depending on your region, you can often hold them in tax-efficient retirement or savings accounts. Essentially, direct ownership is for those who want to drive the car themselves, and ETFs or ETPs are for those who want to get to the same destination but using a familiar map. If you choose to go with ETPs or ETFs, look for what's called physically backed structures. What this means is that the product you are buying actually holds the underlying crypto and is transparent about where they are stored. At 21 Shares, we use carefully vetted, independent and institutional grade custodians, and we have done from the very beginning. Now, there are some risks to consider. Crypto can be more volatile than some equities and bonds. Rules can change. Custody choices matter. And if you use listed products, learn about the issuer and the custodian. Do your own research. Okay, so in summary, what is crypto? It's both the digital assets that live on public blockchains, such as Bitcoin, Ethereum, and Solana, as well as the actual blockchain itself. Why buy crypto? Because it's an investment in a new technology and the future of finance. How much crypto to buy? Well, that depends on your goals and your risk appetite. But our research shows small allocations improve risk-adjusted returns. And how to invest, either by directly interacting with the blockchain or using products such as ETFs or ETPs, depending on your region. We really hope you've enjoyed this top-line introduction to crypto. If you want to dive a bit deeper into crypto, be sure to subscribe to the channel and head to the 21 Shares website for more information. QR code and links on screen now. See you next time.